Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me is Shail Bhatnagar, our markets editor. Well, it's the last session of 2023 and the party continues on the Lal Street. But what should be your strategy for 2024 and where are the opportunities for you at this point in time? We will discuss this and much more. But first up, the top headlines for you. The Nifty will attempt its final hurrah on Friday as the quarter and full year draws to a close. Retailers, ultra HNIs and mutual funds will be fully active to prop up portfolios on the final trading session of 2023. Oil retailers, HPCL, BPCL and IOC and auto stocks will be under the spotlight on media reports that the government plans to cut pump prices of diesel and petrol by 10 rupees per litre to pull back inflation. Very good morning everyone and good morning to you as well, Shail. It's the final trading session of 2023 and guess what? The party continues on the Lal Street. I mean, there is no hesitation, no looking back for the Indian markets. Absolutely steady. And the market cap also, if you see, Shail, the market cap of Indian market has managed to cross that $4 trillion mark this year, and this makes the Indian market fourth largest market in the world. Nifty is up 18% in 2023 and Nifty 500 is up 23% and mid cap, small cap, unke to kya hi kehne, mid cap is up 47%, small cap around 55%. And also if you see funds raised through SMEs IPO were up around 175% this year. So I mean, when you look back, you realize that this has been a stellar year for the Indian markets. And as you say, you know, you always say that kursi ki peti bandhi rakhiye. I think hame bandhi rakhni chahiye abhi bhi.
Bilkul. A very warm good morning to you, Tanya, and to all our viewers who are now joining us from different parts of the globe on Market Today at Business Today Television. Rightly said, 2023 has been a fabulous year for those who have remained invested in the market, which is that it's a bull market. Whatever you buy has gone up and whatever decent you've purchased has gone up much more sharply. It's also been a very fabulous trending market. If you look at December and November for the Nifty, about 14% of 18% gains that Tanya mentioned on the Nifty came in the last 2 months. So Tanya, so far so good, and it's been a blowout. If you look at the FII numbers yesterday, it was somewhere like 4,500 crore rupees, and now if you total the month of December, today is still left. It's the best month as far as 2023 is concerned. In I think July they had bought 55,000 crore rupees. I am sure Today's number, if you total with December's net investments, will exceed that. Given that background, Tanya, I think now some sort of sanity should prevail. The Nifty is at 21,800. Let's presume it's 22,000. 200 points on a base of 21,800 points is just 1%. So the psychological levels that the market was trying to hit are in place. Ditto for Bank Nifty at about 48,500. You know, we are close to the thought we had in mind on 50,000. Now one has to be extremely cautious on the long side for two reasons. As you have seen in the sugar sector, the government stepped in and put a dampener on retail sugar prices because they were hurting inflation, and this is 2024 going to be the mega election year. Similarly, the government is now likely to take action on the oil marketing companies to sort of coax them to cut down diesel prices by whatever amount. These are media reports, still unsubstantiated, but mostly this will happen. It essentially means that the government is now overactive in the market to sort of tamp down on any kind of froth that is coming in because of underlying prices of commodities rising. So one has to be really very careful from now on. However, as I mentioned, the bull market remains in place. These are frothy spaces and one needs to be very careful. Now, the risk reward ratio, Tanya, is how should I say, evenly balanced, if not in disfavor of bulls. Given that in mind, the Nifty has a very strong support on 21,700, 600 and 500. The underlying granularity of the market is very strong. Yesterday you had 12 Nifty stocks hitting all-time highs, and as the data is there in front of you, in December alone, with one trading day left today, we are up 8.2% on Nifty. This is the best monthly gain since July of 2022, Tanya, and due respect to the liquidity that is there in the market, but due caution to the possible pitfalls and hurdles that are there ahead. Tanya.
Absolutely. So near-term target for Nifty is 22,000. So that is on cards. Let's see how the action pans out going forward. But let's discuss Bank Nifty also, Shail, because this index is also up around 9% in December. And the index actually, the sector actually is in focus after RBI gave permissions to insurance players to raise stake in Indusing, Equita, Small Finance Bank and Federal Bank up to 9.95% equity. So of course, let's discuss the support and resistance levels for today, Shail. And this index, if you see, this is up around 13% in 2023 so far.
Yes, so it's a percentage point gain per month, and that's the thumb rule in the market, Tanya. Anything beyond that is God's grace, and that grace comes from your own pocket, which has been picked from the number of months ahead. So 13% in 2023, perfect. Again, 48,000. If you look at December's rally, as you very rightly said, is in the vicinity of somewhere like 4,600 points, and that's sort of put the index in the overstretched view. We were hoping for 50,000. We are at 48,500. Tanya, my understanding is that this is enough. If you look at how data has panned out over any number of years from 2020 to 2023, January and February have been considerably weak. If in the previous year, November and December have been fantastic. So that's again a reversion of the mean, which is the fundamental, how should I say, foundation of the market. If you have rallied very sharply in the previous 2 months of a particular year, then the next 2 months are particularly, how should I say, let me use the word challenging. So both Nifty and Bank Nifty have done fantastically well in the month of November and December, and for both January and February is likely to be, how should I say, a zone where you'll see more profit booking than advances. I hope I'm wrong, but then putting you on the right path is our job and our responsibility, and we take that very seriously, Tanya.
Absolutely, and I was reading this data, Shail. 7 out of 10 months, 10 January months have been negative for the Indian markets, and it's a seasonally weaker month for the Indian markets. But let's see how the action pans out. But let's discuss future and option space as well, Shail, because lots happening there as well. So what are you tracking in there?
So Tanya, today is the first month of the January FNO expiry. What I'm looking at is, how should I say, caution laced with a lot of bullishness. One, I would remain, how should I say, wedded to PSU stocks. We'll see some profit booking happening in OMCs, which is HPCL and BPCL, given the background, how should I say, noise that is coming in terms of how, the government wants to sort of cull down on petrol and diesel pump prices. That's going to come out of the government's kitty, and that's going to come out of the profit that HPCL and BPCL make on per liter. How that impacts the stock price remains to be seen, but they've rallied very, very sharply yesterday and all through December. So a bit of profit booking both on HP and BP. And I'll keep the auto stocks in mind because the build-up is very, very sharp. And over the weekend, you will see, especially on Jan 1, data coming in. So primarily Bajaj Auto and primarily TVS Motors, and of course Tata and Ashok Leyland. Tanya.
Absolutely, got that. So these are the stocks. Keep an eye out on these stocks as well. But Shail, let's discuss global markets as well, because Wall Street is also looking to end this year on a strong note, like us. And like you said, Santa to honi ka hi hai, to rally to honi hai wahan pe bhi. And if we look at the yearly performance as well, S&P 500 is up 24.6% in 2023, Dow is up 13.8%, and Nasdaq Composite has led the way with a gain of 44%, with its biggest annual increase since 2003. And the good news is also, Shail, that FIIs, they have bought shares worth 4,358 odd crore rupees yesterday, and DIIs, they have also purchased around 136 odd crore rupees worth of shares in yesterday's trading session. Crude oil prices also fell around 3% overnight. So let's understand from you now that what is now essential to track from all these overseas cues.
Tanya, I would focus on the Nasdaq, and it's a fairly sensible thing to do. Of course, it's a 44% uptick, and as you rightly mentioned, the best year since 2003. So that is in place. But remember, Nasdaq has not hit a record high as yet, as have the S&P 500 and as have the Dow Jones Index. So there's a 800,000 point gap still between what was Nasdaq's previous high and the value now. So my understanding is that it will be breached because we have rate cuts on our way. So that is something that I'm looking forward to, and that also means that domestic IT in India will most likely outperform a lot of other players because it rises completely in sync with what the Nasdaq does. Rate cuts are there, and that also means that cost of doing business for how should I say, large IT companies in the US comes down. Remember, they survive only on acquisitions, and if your cost of financing goes down, then you are able to acquire faster, bigger and better. So that is there, as also the fact that come January 1st and the first 10 days, you'll see earnings of IT companies coming in the US as well. That will set the trend in India, Tanya.
Okay, absolutely, Shail. And Mayuresh Joshi will also join us shortly. But Shail, meanwhile, why don't you, tell us some of the sectors one should keep on radar, especially for 2024?
So Tanya, now what has happened is that the maximum amount of actual wealth has been created by PSUs in 2023 to the vicinity of, if you look at the President of India's stake in the 78 PSUs that we track, it's gone up by 10.76 lakh crore rupees. Yes. So that remains in focus. I would imagine that the power sector will be the biggest draw as far as prices are concerned. You haven't seen the best of Coal India, you haven't seen the best of NTPC, as also smaller PSU and smaller private players in the power space. So that is going to be a buzz for 2024. I would imagine banks, given the strength that the RBI has observed in the balance sheets of the entire banking sector, they will do well. My understanding is now some of the rally will be on the private banking space, especially HDFC Bank. इस बेचारे ने बहुत बुरा टाइम निकाला है और one must sort of give credit to the strength of the management, strength of the balance sheet, and of course the underperformance. As I have said, 4% on HDFC Bank in 2023, 18% on the Nifty. तो कहीं तो swing बनता है ना. So that's the underperformance. But why waste my breath when the best head of research in the market is with us? Let's welcome, ladies and gentlemen, Mr. Mayuresh Joshi on this final day of 2020 and the first day of January's FNO expiry. A very warm welcome to you, Mayuresh. We've closed the books on 2023, and what are your opening comments for 2024?
Morning, Shail sir. Morning, Tanya. Always a pleasure to be on your show. So two things. One, as you rightly pointed out, most sectors did outstandingly well in 2023. We just published a report late night yesterday on how different asset classes have performed, and equities probably have stood the test of times against most asset classes in 2023. Now, will the outperformance continue in 2024? I think that's the million-dollar question. But I think the examples that one probably has in front of us, specifically from a global macro data point perspective, we're expected to see rate cuts at some point in the next calendar year. Inflation is coming off. The macro data points have started to firm up. And therefore, there is every hope that after the first quarter of the next calendar year, there is revival in economic activity, which will largely play out. Now, within that entire global basket, India's macros and micros have stood the test of time in tough times. And therefore, as the easing cycle begins globally and locally as well, a huge boost is expected for our GDP. A huge boost is expected in terms of capex, expected to continue on manufacturing and growth-related sectors. And therefore, the output ratio in terms of real and nominal GDP that gets measured, we should probably be the best in the globe as 2024 comes. Let's not forget, with rate cuts, a lot of FII flow also comes towards emerging economies. And there is very little choice within the emerging pack, where again India stands to benefit from significant flows coming in the next financial year with stable domestic flows. Obviously, broader markets are now well above fair value zone, and therefore 2024 will be a year where certain sectors and certain stocks will do well. It will also be a year where large caps can probably do better than the larger mid-cap universe. But I think the market should continue their good ride forward in 2024 as well. We will have those intermittent corrections like we always have in good roaring bull markets, and those will be very sharp intermittent corrections. But I think long-term or medium-term investors should not get perturbed, at least by these corrections which come through, because these corrections will get quickly bought into as we speak in the 2024. So if there is no outside event which probably happens like a black swan that we saw during COVID the last few years, my belief is that the structural downside of the market remains very, very limited.
Absolutely, that's the word coming in. And very good morning, Mayuresh. Always good to have you on BTTV. And after the outlook, let's discuss your top picks as well, because it's going to be a stocks selective action that's going to take place going forward as well. So which are the stocks that are on your radar, especially for 2024?
Morning, Tanya, once again to you. So I think we've discussed a whole host of stocks, and I'm sure Shail sir has noted that in his brown book. And with his habit, I think I've also started noting down stocks in my diary as well. So
Oh, wow.
it's confirmation on what I'm probably speaking. Having said that, I think the two broad themes which will probably come out in 2024 is obviously going to be manufacturing and consumption. Now, within the consumption basket, we've obviously spoken about packaged foods. Through the example of Bikaji that I probably have discussed a couple of weeks back. But Parag Milk Foods is something that we believe can do well from a consumption perspective in 2024. The expectations are in terms of the product mix itself for Parag Milk. Liquid milk is around 9% of the overall composition. Value-added products, which is ghee and cheese, form almost 67%. There are new businesses, which is Avatar, which is basically the protein side of the market with protein supplements, so on and so forth, is around 5%, and it's compounding and growing very, very fast. As far as numbers were concerned, for the first time, they delivered a top line of 1550 odd crores with a margin of 6.8. But there was a significant bump up in EBITDA margins for Q2 at 7.3, largely because of milk prices coming down at 35.6 rupees a litre, which led to improvement in gross margins at 23%, reflecting positively on EBITDA. The aspect in terms of value-added products are higher margin businesses, and therefore I think the market share that they have in ghee at 20%, cheese at 35%, good institutional backing on this, and at the same time diversifying into the retail reach as well. They've got 4.5 lakh retail units as we speak. The expectation from management is to reach 13 to 15 lakh units over the next couple of years. So I think that will be a very good mix between B2C and B2B as far as the overall business is concerned. Expectations of margins remaining stable as we go forward, because there's expected to be a good flush as far as the output is concerned. Their factory is very well equipped, modernized at this juncture, and therefore the quality parameters that one probably looks at is very well taken care of. So I think purely from a consumption perspective and the end applications that all these products have across the B2B industries and the indirect reach from the B2C business will probably aid earnings growth. So this is something that we've kept on our radar as far as markets with India is concerned. The second stock, and I heard Shail sir talk about NASDAQ, IT is expected to continue doing well. Obviously, mid-cap IT has outperformed the large caps by a huge margin. But I think the tailwinds that favor mid-cap IT are obviously good order wins that continue in that size of 1 million and 10 million, which should not probably get deferred by a large bit, even if we get a soft landing in the US. And therefore, order wins expected to continue. No pricing stroke demand pressure expected on these orders. A large part of wage hikes behind us, though Q3 is a typically weak quarter, furlongs and Christmas holidays. The expectations over the next year is that the stable growth in constant currency and dollar terms should continue, and therefore stable EBIT margins because of all these factors at play. Having said that, First Source Solutions is something that we continue liking at Markets with India, and therefore the expectations that the management has put forth of a 1 to 2% constant currency growth year on year after a good show in the first half so far, with stable margins at 11.5% as far as EBIT is concerned, should lead to significant amount of bottom line growth. The best part of their business is the generative artificial intelligence platform that they are putting forth, and it is getting very well received across enterprises in North America and Europe, because that's where a chunk of the revenues come from. And the expectation is that this platform will kick off quite soon.
Right. So we have 2 repeats and 1 fresh addition. I've checked my little grey book. Mayuresh has earlier mentioned Bikaji Foods and First Source Solutions. Today's edition is Parag Milk in his, how should I say, quiver full of arrows. This used to be a very good book by Jeffrey Archer at some point of time in the 1980s. And as I said, that Mayuresh is the best head of research in all of market, and we get a lot of quality advice on how to navigate these markets with the best possible mid-cap and large-cap stock picks. So for today, Bikaji Foods. Actually, Mayuresh, we have named you as Market Today's Bhujia Man. And one of these days, both you and I, one of these days, you and I will go to Gift City and have bhujia there, and post a picture on our Twitter feeds. Mayuresh, a word of caution from your side.
Yeah.
We've seen the Nifty rally 8.2% in December, somewhere like 5% in November. So all put together, 14 percentage points out of the 18 percentage points that the Nifty has gathered in 2023 have come in the last 2 months. Now, what ahead for the real short term? मतलब long term में तो बाजार compound करता ही है, and the bull market is in place. But your own assessment for January.
So, Shalson, I think my sense is that everybody's waiting for 22K. Maybe we hit 22K. Maybe we go a couple of, 100 basis points of how that as well. But after that, I think it will largely be somewhere where the markets will look for two aspects in terms of direction. One, obviously, how the corporate earnings are expected to play out. Because as we head into Jan and the first 7 days, Q3 numbers will start flowing in. And therefore, how numbers are playing out for certain sectors and certain stocks will lead the direction of the market. And obviously, I think the markets will be range bound to a certain extent because there will be a lot of deliberations that will happen in terms of what can come out of the interim budget, which is expected on the 1st of Feb. So the kind of announcements, the apprehensions surrounding that budget will also keep certain sectors on tenterhooks. So my own sense is that we might very well hit 22K from an immediate short-term perspective, maybe even move to 22,200 odd levels. But after that, there will be some element of consolidation that can happen in the market. And therefore, one should, as I said, have both these aspects clearly played out on the table. The one, how earnings are playing out, and what is the kind of expectations that one probably can have from these earnings perspective on certain sectors which can continue growing their earnings over the next few quarters. So earnings will be a base case scenario for the markets going.
Okay, absolutely. Caution is advised at these levels especially. And I'll discuss, PSU gold rush with you as well as Mayuresh. But let's do one thing. Let's take a quick and short break. Lots more coming up on the other side. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today. Tanya and Mayuresh are in conversation on the gold rush that we are seeing in the PSU basket. Tanya, over to you.
Absolutely. Thank you, Shail, for that. And, Mayuresh, coming to you, wherever there is a PSU play at this point in time, it is just getting stretched on the upside. So would you caution, or do you think that this rally on the back of maybe the earnings momentum in many of these PSUs is justified?
So Tanya, since you spoke out of the PSU gold rush, it reminds me of a very old story of the Californian gold rush, which is a very old folklore that market makers and market followers have. During the Californian gold rush, everyone wanted to go for gold. And the best things that happened were spades, because that were the biggest things that got sold during the gold rush. So I think the PSU gold rush is probably happening in real earnest as we speak, the best performing index for calendar year 2023. But a lot of these prices have now got stretched. Again, I think the whole bottom line is over the next couple of years, expecting utilization levels, execution of orders on hand for players within the defense space, for players within the power space, for players within the railway space, is largely factored into a large extent. And it's a no-brainer that these guys will have to go in for capex, whether brownfield or greenfield, to probably ensure that the order books get sufficed. There is no two ways about orders. Orders are sufficient enough for revenue visibility over the next 7 to 8 years. But it's about execution and it's about capacity enhancements, which will drive earnings over the next 4 to 5 years. So you need pullbacks on that. But as I mentioned a couple of days back, I think the PSU banking basket selectively looks very, very attractive, still below book as we speak. Yesterday's RBI report was very, very encouraging. The overall GNPs have come down to 3.2 from 3.9, net NPs at 0.8. And the stability report mentions that there are sufficient levers in terms of growth dynamics going forward, with rate cuts expected at some point in the next calendar year, and a very good regulator who's monitoring aspects of the business, including risk-weighted assets. I think this is one space that within the entire universe of PSUs at this juncture at least, that can continue doing well. So I think selectively PSU bank can continue doing well.
Okay, let's take a look at how the pre-open has moved in. 21,843, ladies and gentlemen, a fresh record high on the Nifty. We are settling 64, 65 points higher. Remember, we had flat cubes coming in on Gift Nifty. So yesterday's buying momentum remains at least in the first initial few ticks of Friday. Of course, this is also the new F&O expiry for January. Let's see how markets open. For the moment, let's focus on the index heavyweights. Reliance is in the green, 2610, 0.2% higher. How about HDFC Bank in the green, 0.3% higher, 1710, and Infosys is flat at about 1560. Okay, what else is in the green? Tata Motors, remember, now the build up or the continued build up in auto stocks will start, because coming Monday we'll have auto numbers in front of us. We have Tata Motors 755, fresh record high here. Okay, what else is ticking? Let's look at the corporate banks. I'm very keen on banks today because of the RBI's permission on a particular insurance company to raise its stake in several private sector banks, and that's a heartening development because that shows how RBI is a little more keen for fresh players to come into the equity structure, as also these fresh players are keen to advance their stake. So let's look at ICICI Bank flat, 1,590. How about Axis Bank, 1,100 for you. Let's shift focus to F&O. Okay, what is moving? Banks, IDFC 129, 3.2% higher. Hind Copper, yesterday's blowout stock in the F&O is still in momentum, 2% higher, 275 for you. National Aluminium 1.8% higher, 131 for you. What else is clicking? Federal Bank, this is one of the banks where ICICI Pru has received permission from RBI to advance its stake to up to 9.95%. When they do it, we don't know, but for the moment 158.40, 1.8% higher. Let's shift focus to Nifty 50 minus the top gainers, index heavyweights. Okay, we have Tata Consumer again at a record high, 1,050. Let's look at the Adani twins, 0.5% higher on Adani Enterprises and 0.5% higher on Adani Ports. What else is clicking? Hero Motors, 0.3% higher, 4186. I am more keen to find out what HPCL and BPCL are doing given the news flow in the market. BPCL is 1% lower, 461.80. I want to see what HPCL is doing. Just a moment, ladies and gentlemen. HPCL, Hind Petro. I can't see it in my screen at the moment. We'll get that fixed. But the PSU basket, let's see what that's doing. What's the top gainer here? Again, it's Hind Copper, National Aluminium, and Engineers India. Gas Authority. There's a research report out from Motilal Oswal pointing to a target of 190. Okay, so this is how the markets have settled. I believe Osho Krishnan would be with us. Senior Research Analyst, Technical and Derivatives at Angel One. Good morning to you, sir, and a very warm welcome on December's last day and Jan's F&O expiry the first day. What are your two stock picks for today?
Very good morning, Shail. Well, overall, as you have said, we are having a very merry year this year, and we are expecting to have a very strong starting for the 2024. But looking at the overall setup that we have seen, the first technical pick which I have uh, targeted on my chart price is something from the oil and gas sector. Petronet is looking very positive. If we will be looking at the daily chart of Petronet, then it has seen a very strong breakout in yesterday's session above the 200-day SMA. So we are expecting that any dip towards the zone of 220, 219 should be arguing very well for this counter, and we can expect a decent upside target of nearly 235 to 236 in the near period. So first bit will be on Petronet. Second is from the FMCG space. If we will be seeing FMCG, then a strong breakout we are seen in many of the counters in yesterday's session. The first counter is Imami Limited. So Imami Limited had surged nearly 7% in yesterday's session, but the momentum it has carried from the breakout zone of nearly 514, 515 was tremendous. So we are expecting that from here onwards, a decent upside target can be expected if there will be any some kind of blip in between for today's session. So the buy level should be approximately 525, 530 odd levels. On the higher end, one can expect a target of 550 on immediate basis, and also 515 should be kept as the stop loss.
Okay, absolutely. So Petronet and Imami, these are the two picks coming in, and what a lovely day today, Shail. I mean, we have such a wonderful panel. We have Funda Guru with us, Mayuresh. We have Technical Guru with us, Osho. And Osho and Mayuresh, coming to you, you know, I met a friend yesterday and he was asking that why don't you suggest me a sasta and acha PSU stocks? Because we have seen this PSU gold rush. So everyone is looking now for an undervalued PSU stock that might be added to the portfolio. So Mayuresh, coming to you first, and then I'll come to you, Osho, for this pick.
Oh, absolutely. And as I said, continue with our thesis at Markets with India on PSU banks selectively. Again, selectively is is the word that I'm using very purposefully. Bank of India and Canara Bank are a couple of stocks within the broader PSU universe that can continue doing well. Bank of India is something that, as a clear disclaimer, we have recommended to our clients. I do not have any personal holding, but largely I think what you've probably seen in terms of the disbursements or the advances growth has been very robust. The deposit growth has been robust as well. And though there has been a compression of NIMs from an interim time perspective, the expectations of rate cuts will probably mean that as deposits come in for repricing in the next calendar year, over the next couple of years, the NIM compression should reverse very sharply as the rate cut cycle begins. The capital adequacy remains adequately placed as we speak, and therefore I think the entire ALM book, the provisioning that they are probably carrying, and a lot of these mid-cap PSU banks, Tanya, if you recollect their management discussions and commentaries, are pointing to the fact that they are expecting a good amount of recoveries and upgrades to happen in this calendar and the next calendar year as well. And if that probably happens, you will see a direct positive impact in terms of the bottom line as well. Again, trades around 0.8, 0.9 times book as far as 25 numbers are concerned. And therefore, from a valuation perspective, from an earnings perspective, and from a sectoral tailwind perspective, selectively, I think banks like BOI, stroke Canara can continue.
Okay, absolutely. So Bank of India from Mayuresh. Now, Osho, over to you for your top technical PSU pick.
See, first of all, from the small ticket size is something PNB on the price chart. It has seen it is hovering around the 2-digit number, so we are still expecting that from here onwards it has plenty of potential to surge into the 3-digit number. Specifically, 120 is the target that we are expecting for PNB. But already we have seen a very drastic up move in the current financial year. So there has been a strong up move in majority of the PSU banks, but this is still looking positive, and we are expecting a decent upside target in this counter. Second one is Federal Bank. Federal Bank again is having a very strong potential, having the cycle of higher highs, higher lows. So we can expect a decent upside movement in Federal Bank also. So both these PSU banks are looking very positive, and one can definitely look to gauge the momentum in the near term. Also for a medium to long term perspective, PNB looks much attractive even at the current levels also.
Okay, ladies and gentlemen, this is Friday and the last trading session of 2023, as also the first trading session of January's F&O expiry. The Nifty settled 41 points lower. 21,737. I think this is happening after a very, 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 very long time that you see a minor gap down. Be that as it may, and that's because of the fantastic rally that we've seen so far. Let's see what are the stocks that are pinning the index back. Okay, Axis Bank 0.6% lower, 1101. Kotak 0.5% lower, SBI 0.5% lower, and ICICI Bank 0.2% lower. So banks are out of favor today. Tata Motors, being an auto stock, is the top gainer. Actually, there is not much of movement, and 41 points on the Nifty is barely anything. But let's just shift focus into the other space. BPCL is the top Nifty loser, down 2.4%, 454. Remember, this is just profit booking. News that the government might be contemplating a 10 rupee price cut pump prices of retail as of petrol and diesel is something that's unnerving short-term traders. Hindustan Petroleum 400 rupees, 423 is the top F&O loser as far as prices are concerned. IOC, BPCL and HPCL are respectively on 1, 2, 3 as far as the losing side is concerned on F&O. What is gaining here? Well, Federal Bank, and that's because of news coming in that True ICICI Insurance Company has been allowed by RBI to raise its stake up to 9.95% in Federal Bank. And of course, our good friend Mr. Osho Krishan has also marked this stock. Gas Authority 1.7% higher, National Aluminium 1.5% higher. So the overall theme is fairly bullish, but one or two stocks, one or two sectors, broader markets slightly flat on last trading day. Osho, to you, what would be the top bet in the blue chip space within the Nifty for January and for 2024?
See, overall from blue chip, I'll be focusing more on the IT front. IT is looking very attractive at current levels, and majority of the heavyweight IT companies are on the verge of giving a breakout. So first of all, the first counter which is in my radar is HCL Tech. If we will be looking at the technical chart of HCL Tech, then it has seen a decent up rally, then it has underwent some kind of price-wise correction or profit booking, and again is following the higher trend. So basically the parameters on technical front looks bullish, and we can expect a decent upside movement in HCL Tech, followed by Techem. Techem is also looking very positive. If we will be talking on the technical perspective, then it is on a verge of breakout. So a sustainable approach or sustainable buying above the zone of 1300 can definitely give a very strong boost to Techem. So from here onwards, one can expect a decent upside movement in giant or heavyweight IT companies in the coming period. So IT will be the first preference, followed by banking. Banking is also looking positive. So one should have their focus in banks, but already they have seen a very strong upside movement in the recent period. So one can even look for some kind of cool off in the coming period, and then they can accumulate it for medium to long term perspective.
We're just about to open, so why don't you take it away? I'll ask my questions later.
Okay. Fine. Let's now look at the broader structure of the market. Remember, December so far has been fabulous for Nifty, up 8.2%. It's been fabulous for Bank Nifty, up 9.2%. And this is after November's strong gains. So the market is overstretched technically. Let's see what January brings and how the F&O space as well as the cash space shuts shop today. Remember, FII buying has been extremely strong, and we have the first ticks when it comes to the Nifty, down 28. Let's see what else is ticking. 21,735 for the Nifty, 45 points lower. Nifty Bank 130 points lower, 48,363. It's a 0.6% cut on the Nifty IT index, 35,445. Remember, we have had 5 days of blowout gains, record highs and whatnot. The market at the moment sort of pausing a bit. Now, what is causing this mild downtick? Reliance is up 2610. What is HDFC Bank doing? HDFC Bank at the moment is 1697, 0.5% lower. What is Infosys doing? 1551, 0.7% lower. Remember, these are the 3 index heavyweights. 2 of them are down in the red. Out of the 10 index heavyweights, only 4 are in the green. ITC, L&T, Tata Motors, Reliance. Okay. Which is the top loser? It's Kotak Bank, it's SBI, it's Axis Bank. Okay. We'll shift focus to FNO and look at the market beyond the index heavyweights. Okay, there's profit booking happening in HDFC Bank, 0.3% lower. Hind Petro, this is the first stock you need to watch, 3.2% lower, 404. BPCL, 3% lower, 451. IOC, 129 rupees, down 3%. So this is impacted by news, and this is what needs to be looked at if you are a trader on the long side. Okay. What else is buzzing? There's profit booking on Hind Copper. One should be worried. It's still the top traded counter, 1% 740. Let's look at the PSU basket immediately. This is where the maximum strength is there in the market in terms of long side trades. Okay. The day for metal counters. Hind Zinc, 2.3% higher, 320. Engineers India, 2% higher, 175.60. National Aluminium, 2% higher, 131. GAIL, 158.80. This is up 1.4%. MOIL, Mazgaon, DOC, BDL, Midhani, MMTC, all in the green. Engineers India is taking it away. This is a stock which we need to focus on. I also want to see what HUDCO is doing, because that was really in the news for yesterday. HUDCO, I can't see it immediately. Let's see what HUDCO is up to. No, I can't see it on my screen. But Engineers India for you, Osho, what are the charts telling you?
For Engineers India, there has been a very significant up movement in the last previous trading session, and that has given a breakout. Basically, the rounding formation has been seen, but on the higher end. So from here onwards, one can expect the rally to continue or the follow-up buying to continue, because it has given a very fresh breakout in yesterday's session. On the higher end, one can expect 178, 180 for immediate as an immediate target. But for a longer duration, there can be a very strong upside movement that one can expect. Overall, the technical setup looks very positive. It has seen a very increase in overall trading average than the average trading volumes in the recent period. So overall, one can even expect it to surpass the zone of 190, 195 in the coming period. But for today, 178, 180 should be the target that one can look to book for.
Okay, absolutely, got that. And Osho, coming to you for a quick technical check on Gas Authority of India also, because this stock has been outperforming in how on a YTD basis it's up 65%, 6 months 51%, and in the last 1 month, let's see, okay, 26% return from Gas Authority of India. Will the momentum sustain going forward?
See, overall, this counter is looking very robust. If we will be, as you have mentioned, it has given a very tremendous returns over a very short and even a long-term duration. So the risk reward is definitely not very much favorable for the buyers. But looking at the overall momentum, one can definitely try to accumulate this on some kind of correction or profit booking towards the zone of 152. So that should be auguring well for the buyers. If it sustains above 152, then in the coming period, we can expect some decent upside rally also. But if there will be any breach below the zone of 152, then it might plunge towards the zone of 140, 142 in the near period. So those who have holding the position should definitely keep a stop loss of 152 for a higher target of 165 on immediate basis. While on the downside, any breach below 152, one can patiently wait for some more correction towards 140 to accumulate from medium term time frame.
Absolutely. And Sona Comps, I think we should pull up this stock as well. 2.5%, 2.5% uptick there, and the move is just upwards and onwards, Osho. When we talk about this counter, 647.7, that's the level where we are at, and this stock has been buzzing off late. Will the momentum continue? I mean, what are the charts telling you?
See, overall, it has given a very strong consolidation breakout, which was approximately the zone of 60 odd points. So from here onwards, on technical front, one can expect a target of nearly 660 on immediate basis. But in the last 3 days, there has been a tremendous upside rally in this counter. So it might attract some kind of profit booking by the players who have taken positions in the counter. But overall, the target comes around the zone of 660. Even on the downside, 620-30 should be the range where one can definitely try to accumulate it from short-term perspective and for the immediate target of 660. Once it surpasses that zone, then again we need to review because it has seen a very strong upside movement. 10% of approx 10% of returns in 3 trading sessions has obviously given a very strong or robust technical structure for this counter. But 660 is the target where one can look to book their profits.
Okay, let's get Mayuresh into the conversation, and the PCR at that point of time will fire the stock of India Energy Exchange, IEX. Mayuresh, your quick view on IEX, up for 5 days. You know, this was one of those stocks that was killed literally by that massive run up that happened between 2020 and how should I say 2021 December. Then a 3:1 stock split. Now it sees some light of the day given the momentum in the power space. Your view on IEX, and then Osho will take over on this one.
No, so I think with the power demand which is surging every passing month, and the expectations of power demand expected to continue over the next few quarters, the expectation largely is for a trading platform like IEX, which is a mix of both long-term trading volumes and short-term trading volumes, is expected to be a very healthy mix. Again, the kind of tariffs that we have probably seen for the day-ahead market, as they call it, and the term-ahead market as well, is probably looking very, very good as we speak. And obviously, I think there were apprehensions in terms of power trading coming out with their own platform as well, so on and so forth, which might hit volumes of IEX. Also, their gas exchange has started picking up volume. So gas trading on their gas exchange is also expected to pick up significant amount of steam. And therefore, the momentum can very well continue for the tailwinds that it has. Ultimately, earnings is something that we'll probably expect, or one can expect the kind of re-rating in the stock. But the large expectation or the broad expectation is that volumes are relatively stable, the tariffs are relatively stable that they are realizing at this juncture, and there should be a very steady earning growth that can come through. So the momentum can very well continue, assuming the insatiable power demand that we probably have over the next few months and quarters.
Okay, let's look at IREDA. 102.5. This is the second top gainer in the FNO space. Momentum back after a 2-day rest, up 5.5%, and very, very strong breakouts happening here. Your view, Osho, on IREDA?
See, technically, there won't be any significant development that can be seen, but overall, the counter is looking very promising, very strong. So here onwards, also one can expect a decent upside rally. But technically, talking about any specific levels or zone will be something that will be very much difficult looking at the overall time frame it has spent on the secondary market. But on the higher end, on immediate basis, a breakthrough above the zone of 108 can provide some kind of boost towards the zone of 120 on immediate basis.
Yeah, and also look at Federal Bank. One of your picks, right? It is on a roll today. And talking about some of the other buzzing stocks, firstly coming to you, Osho, and then I'll go to Mayuresh as well for this. Masdok is also among the top gainers, and we have been, talking about this defense play and defense rush, I would say. So what are the charts telling you for Masdok? I mean, is the counter overheated, or will the momentum sustain?
See, overall, the Masdok has seen or gained traction in the recent period. It was consolidating for a long period near the zone of 21-day exponential moving average on the daily chart. But in the past 3 days, we have seen strong traction on the back of volumes that can be seen in the Masdok. So which has given it a boost towards the very critical zone of 2300. 2300 being a a previous swing closer is something that one should definitely look for. So a sustainable approach, a sustainable buy above the zone of 2300, 2320 can again provide a boost for a higher targets of nearly 200 odd points. So 2500 is something that can be expected by this counter. But again, one should wait for a follow-up buying, because after testing the zone of 2300, the stock has again been calm, or it has underwent some kind of consolidation. So once again, if there will be one more day of follow-up buying or momentum, then one should definitely buy it for the higher targets of 2500. And even on the lower end, from risk reward point of view, it is hovering at a very decent zone, because on immediate basis 2180 is the zone which is expected to provide some kind of cushion in the short term period. So overall structure, it looks very robust, and one day of momentum can provide a very strong thrust in this counter for nearly 200 odd points.
Absolutely. Mayuresh, if you see the performance, Nasdaq is actually up over 200% in 2023. And not just Nasdaq, I mean, we have so many multi-baggers from the defense space. So how would you play this theme in 2024? I mean, going forward, any stocks on your radar from the defense space, especially at these levels?
No, so anybody who's holding it can definitely ride the momentum, Tanya, because the tailwinds, as I said, structurally are very much in place for these defense players as well. No doubt about order books. The margins at which these orders are coming are reasonable as well. They're executing quite well so far. And therefore, with enhanced capacities as they come through, the expectations of compounding revenue growth over the next 4 to 5 years is a given. So I think pullbacks on HAL as an example, pullbacks on Cochin Shipyard as an example, pullbacks on BDL as an example, can be good proxy plays for these defense-related counters. But the pullbacks have to come. So I think at some juncture, if the pullbacks do come in, I think they become better entry points for fresh investors who will come to the stocks.
Okay, absolutely.
Let's mark, Tanya, I think you should mark Motherson, please do.
Yeah, so it's the top gainer from the auto pack, Mayuresh, and you know, we have been discussing auto stocks lately, and some of the auto ancillary names, they are also back in action. Your quick thoughts on Motherson, Sumi?
Remain optimistic, because I think the kind of business model that it has, the expectations of overseas subsidiaries expected to contribute significantly well in the coming few years, with this entire transition happening on the EV part, is going to play its role in terms of significant value accretion as far as Motherson's overall product profile and so it is concerned. And it plays positively in terms of both margins and numbers as well. So that should reflect very positively. But auto anchors as a space, Tanya, is something that we believe will remain very, the earnings will remain very positive, and therefore we remain very constructive. Both in terms of the transition from the internal combustion to the electrical mobility platforms, existing servicing of the existing players on the petrol and diesel variants, and building in capacities for the electrical mobility platforms as well as servicing the replacement markets. So I think all these legs that will provide growth over the next few years are firing on all cylinders and will continue to do so as this transition happens. So I think auto anchors is a very good space to be.
Okay. Again, my compliments to you, Tanya. That was a great watch on Motherson. I'd like to just make one major point. Remember, Motherson has been a long-term underperformer in this sector. And when you look at, stocks, of course, this is the big daddy of the auto ancillary space. And if you look at how the market cap is amongst the top 20 stocks in terms of market capitalization in the auto ancillary space, Motherson is the second biggest one after Tube Investments. And would you believe it, its price to sales, as Mayuresh will confirm, is below 1. Basically, it means that market capitalization is lower than sales. So given the rally that we are seeing in Sona, Comstar, in dozens of other dozens of other auto ancillary stocks, it is Motherson which will sort of now lead the charge, given the fact that it's seen an all-time high of 149, and it's just entered double digits, your triple digits. Your very quick view, Osho Krishnan, on Motherson.
See, Motherson is looking very attractive on technical charts. It has already tested the zone of 100 in the previous period in the month of September. Again, it underwent some kind of correction. And looking at the very strong support of 200-day SMA, it has resurged from here onwards. So overall, it's looking very promising at current levels also, and a decisive breakthrough above the zone of 102, 103 can give a very strong upthrust in this counter for the immediate upside target of nearly 50 odd points. So 118 to 120 is the target that one can expect in the short run for Motherson. Overall, the structure looks very strong, and even on the lower end, if we will be seeing the risk reward ratio, then even on the lower end, we have a very strong support zone near the 92 to 94 odd levels. So that means from here, 6 points on the downside and approximately 18 to 20 points on the higher end one can expect in this counter from medium term time frame. So overall, one can definitely look to accumulate it for a medium term time frame.
Okay, this is one of those stocks which are portfolio picks for the long term, and one can look at by taking another independent financial advisor view as of now. Tanya, the first 15 minutes have lapsed. The market has held, which means that the Nifty opened 40-45 points lower. It's still there. Let's see what the next 15-minute candle does, but there is a lot of underlying granularity in terms of buying. And where is it concentrated? It's in railway stocks. Railtel is 4.6% higher, 307. They won a 200 crore order from Central South Railways. What else is buzzing in Railtel? RITES is up 2%, 505.95. IRFC is getting its momentum back, 97.80, 1.4% higher. Mayuresh's favorite, TexRail. I remember, Mayuresh, you mentioned it 3 weeks ago. 170.50, 1% higher. RVNL, IRCON, IRCTC, all in the green. In the PSU basket, ladies and gentlemen, it's MSTC, top gainer, 5.5% higher, 680. Irida is taking it away. Hindustan Organic Chemicals, we won't focus on this one, very, very low float, 8% higher. You have the likes of NFL, BDL, RCF, ITI on the green side. What's not buzzing, and that's HP and BP. 3% lower on HPCL, 405, 2.25% lower on BPCL, 455, and IOC 1.4% lower, 131.50. Profit booking continues on Hindustan Copper, not to be worried about. And we also have HUDCO down a bit. So that's the broader structure of the market. Seems to be recouping. Yes, Nifty, while it's still down 24 points, is now at the day's high at about 21,754. Ladies and gentlemen, Tanya.
Okay, absolutely. And before we let you go, Mayuresh, just your thoughts on metals, because we have seen some of the metals counter back in action. Some of the aluminium names are better plays, of course, because of the cycle, and global brokerages are also bullish on copper because with the entire transition in the electric vehicle space, the demand of copper is likely to go up. I want to understand from you, what are your thoughts on metal space and any stocks on your radar for 2024?
I think both Paris and non-Paris, I think the underlying story has been very common. The Chinese destocking, the global destocking which is happening across the market, Chinese demand has come off quite significantly. And therefore, LME prices have come off, whether it's steel, whether it's copper, whether it's zinc, whether it's aluminum, or whether it's bauxite. And therefore, I think a lot of these metal counters have gone through a lot of pain as far as calendar year 2023 is concerned. At some stage in 24, China will make a gradual recovery as far as their economy is concerned. And as the reprocessing starts of the Chinese economy, specifically real estate, the consumption of metals is expected to move significantly higher. The second element is with restocking taking place, and as inventories will start building up from the absolute low levels that they are at the current juncture, LME prices start building up across the spectrum, and therefore earnings in the first half of the next calendar of the next financial year should start seeing significant amount of boost, both from the Chinese and the global demand perspective. Having said that, what we like at Markets India at this juncture, obviously a lot of stocks have done really well, is General Stainless. Any pullbacks on that can be a welcome opportunity for medium-term investors. The results have been exceedingly good for Jindal Stainless. The EBITDA per ton that they reported in excess of 20,000 rupees per ton is expected to continue at a good pace. Volumes should pick up significantly because the kind of value add that the applications have, specifically in terms of wagons, structural stainless steel structures where it uses are, the value add component gives a huge boost to the EBITDA per ton. I think Jindal Stainless is something that we will keep on our radar. The entire pledge has been released by the management as well, which is a huge positive as well. But let's not also forget stocks like Hindalco on the aluminium side. The usage in electric mobility batteries is going to be significantly higher, and therefore their backward integration for alumina that they've probably got, expectations of aluminium prices jumping up in the next calendar year from absolute low levels that you've seen for the entire calendar year 23 should see a recoupment happening both in terms of volumes and numbers. So I think non-ferrous is where I'm focusing at this time.
Okay, absolutely. So that was metal space for you.
Let's.
And Shail, I think we should thank Mayuresh.
Okay, let's thank him. We'll just take a broader view of the market and then bid him goodbye. He also wants to know what's happening across the board. So 1,200 stocks in the green on the National Stock Exchange compared with 730 in the red. And we track 19 indices for you. It's almost even, Stevens. 9 are in the red and about 10 are in the green. Nifty Auto, as I had pointed out, is the top gainer, 18,562, 0.8% higher. FMCG is buzzing, 0.3% higher. Mid cap, small cap indices are flat in the green, and the NSE 500 is in the green, 93.96. Good, how should I say, advanced decline in the first 15-20 minutes of trade. Mayuresh, thank you so much from deep in the heart for a fantastic, how should I say, stock suggestions, all from, how should I say, July to December. It's been a great rally, one of the best that I have seen over the last 27 years. You've picked up great stocks in the mid cap, large cap, small cap space, and all of them have worked very well. May the lady luck continue shining on you, and may your consumption of bhujia increase in 2024.
But Shail, we didn't ask him about his plans for 31st. We should have, right?
Please go ahead.
So, Mayuresh, what are your party plans?
You are the one who's single on this screen. I'm presuming. Yeah, go ahead.
Because Mayuresh, Shail is all set to party hard. What are your plans?
Yeah, so at a friend's place, having plenty of proteins and plenty of bhujia. So
I'm very sure about that. And what about you, Osho?
As of now, I don't have any plans, but mostly some friends, family, those will be at our home. So as of now, that's I will stay at my home.
Osho,
and I'll be present even on 1st of January also.
Yeah. ओशो किशन जी के नाम में पार्टी नहीं है.
Correct, sir.
But one thing I'll like to add here,
और Mayuresh ji, yeah, please go ahead, Mayuresh. Please go ahead.
Sir, go ahead. No, so what I'm saying is 23 has been fabulous, but 24, Shail, Tanya.
Yeah, please go ahead. You first.
Yeah, so I wish you all you guys and all the viewers of BTTV a very fabulous 2024 as well. May it be full of good health, wealth, peace and prosperity. So I think best wishes to all.
We wish you the same, Mayuresh. And Shail, you want to add something?
And yes, of course, I wanted to add that the invisible middle name in Mayuresh Joshi is Party Hard.
And of course,
That I do.
Bhujia. How can we forget that, Shail?
That I do.
Bhujia.
The market today
Okay,
is Bhujia,
ladies
man.
and gentlemen, you'll see a very nice, yes. And before we let Osho go, I'd like to mark one particular thing that's happening in the market. The downtick in BPCL is getting purchased. Now, this is really, really interesting, and it shows how this bull market is really, really moving. Okay, the day's low was 449, and at the moment it is at 456. Tanya, my understanding is that HPCL and BPCL will close in the green. Let's see what happens. Not so for HPCL as yet, but the day's low on HPCL is 402 at 406 now. Your very, very quick comment, Osho, on BPCL.
See, BPCL was consolidating in a very narrow zone from past 3 weeks. And last day, we have seen a very strong breakout that was backed by very strong volumes. So from here onwards, the overall technical setup resembles to have a very strong upside movement. But as in the morning, we have seen some kind of deep correction in BPCL. So that has augured very well for the buyers. Because if we will be talking on the lower end, strong support is presumed around the zone of 442, 440 odd levels. And till the levels are sustained, one should not be very much caution with their existing position. Even on the higher end, one can definitely try to make, or one should definitely try to accumulate it once it surpasses the zone of 460 on the spot levels. Once it surpasses those levels, then again we can see strong momentum in this counter for today, for higher targets of nearly 474 to 476 in today's session. So overall, the structure looks very positive. On the downside, 440 is a very strong support zone. On the higher end, near to 480 is the target that one can expect.
Okay, Osho, and let's talk about a chota packet, which is the top gainer. I'm talking about RBL Bank, Osho, and it is up around 55% in the past 6 months, and today it's also the top gainer from the small cap space. Your quick technical check on RBL Bank.
See, RBL Bank has seen a very decent upside movement from in the past 3 weeks from the zone of 230 towards 300 odd levels, and again is having a very strong buying traction from the zone of 21 exponential moving average. Technically, we are witnessing a kind of positive crossover, which is again a very strong development on the technical charts. So one can definitely look that it has the potential to retest the zone of 293, 294 on the short-term perspective, and once it surpasses those zones, because in the past 2 weeks there has been a strong volatility or a strong movement. Average traded volume for this, average traded range for this counter has been very significant in past 3 weeks. So once it surpasses the zone of 294, then from there onwards one can expect a gradual up move towards the zone of 300. 300 again being a psychological mark will be having its implication, but one can definitely look for a higher target near to 298 to 300 from short-term perspective.
Absolutely, and IEX is also the second gainer from the small cap space, Osho, Indian Energy Exchange. On a YTD basis, it has not done much, 18% return in just in 2023 as we speak. But what are the charts telling you for this Indian Energy Exchange?
Overall, this counter has seen a very strong rebound from the lower zone of 125, 130 odd levels. If we will be talking on the weekly chart, it was having a very strong resistance near the zone of 155, 156, which has been breached on a higher note. And as it will be sustained on the higher levels for today, so weekly it will be giving a very strong breakout on the weekly time frame. So from here onwards, one can expect a reversal in this counter. On immediate basis, the target that comes around with the formation on the technical chart is near to 30, 35 odd points from here onwards. So 195 to 200 is the zone that one can expect it in the coming future for medium term time frame. Even on the technical front, on the daily chart, after very long duration, it has surged above the 200-day SMA, and all the cluster of moving average are showing some positive crossover. So that is also again a very strong development. So we have to wait just for today on weekly chart. If it sustains above the zone of 158, which it should be, then definitely from here onwards, there won't be looking back. There can be some kind of in between blips, but on the higher front, 195, 200 is the target that one can expect with this counter.
Okay, absolutely. So that's the word coming in on IEX, but we'll discuss some other buzzing stocks as well. Let's do one thing. Let's take a quick break. We'll be right back with lots more. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back, everyone. And let's just go to Osho for some of the other auto names. Motherson Sumi, look at this counter. I mean, taking it away, 3% uptick there, 100. That's the level on Motherson Sumi as we speak. But Osho Tata Motors is also among the top gainers. And, we have been discussing this stock, one of the wealth creators of 2023. The top best auto stock as well from the Nifty pack. What are your thoughts? I mean, where is this stock headed in the near term according to you, and what is your target on Tata Motors?
See, overall, the counter was struggling near the zone of 730, 735 odd levels. But in the past 3 days, we have seen a significant buying traction in this counter. So surpassing those levels with ease in these 3 days. But from here onwards, already it being a very heavyweight, has surged a lot in this year and is in the overbought territory. So one should not be very much complacent with this move at present, but definitely the overall trend remains buoyant. So historically, what we have seen in this current financial year, that once it surpasses to a fresh highs or 52-week high, then it has the tendency to retest the zone of 21-day exponential moving average. So as of now, the 21-day exponential moving average lies down towards the zone of 725, 730 odd levels. So there can be some kind of correction in futures that can drag the counter towards 740, 30 odd levels. Then those levels one should try to accumulate it for a further upside target of 780 on immediate basis. Overall, the cycle of higher highs, higher lows continued in this counter, and one can expect that any dip towards the 21-day exponential moving average should be auguring very well for the buyers, and accordingly, one can have a very strong upside potential in this counter also.
Okay. Tanya, we'll just pay attention to the broader markets. Let's do some market spotting. Let's look at record highs in the F&O space. They are dominated by autos. You've discussed Tata Motors. Look at Exide, 310, 1% higher. This is a very, very strong play on auto ancillaries. M&M, Thar maker as also tractor maker and SUV giant, 1743, 0.5% higher. Hero Motors, 4178, at the moment clicking flat but still in the record high list. Let's look at the NSE 500 list. This is dominated by how should I say low packet bada dhamaka. RCF record high 161, Gale record high, chota packet bada dhamaka, my apologies. Gas Authority 163, 4% higher. GSFC 242.80. Then we have a new entrant called Swan Energy 510. Then let me mark the real estate pack. Lodha Developers 984. Again, the likes of Angel One, Sun Pharma, Apar Industries making up the rest. I think, Tanya, it's going to be a day belonging to Gas Authority of India. 163.10, very, very strong move coming in. And of course, defense is now buzzing. Garden Reach Shipbuilders 881, 2.35% higher. We have RBL Bank, as you pointed out, 5% higher, 282. Indus Towers 194. This is 4.25% higher. These are all running ahead on good, decent volumes in the first half an hour of trade. Tanya, what are you watching?
I'm watching AB Capital, Shail, and I think we should get a quick technical check because the stock has not been able to do much in this year, just 6% return as we speak, but this was in focus because the company has made investments up to 850 crores on a rights basis in Aditya Birla Finance and 50 crore in Aditya Birla Capital Digital. But coming to you, Osho, for a quick technical check on AB Capital.
This counter is in
Yeah.
sloping, is in a downward sloping channel. So we there is still corrective phase is still persist in this counter, and on the higher end we can expect a some kind of recovery only once it surpassed the zone of 170, 174 odd levels. So once it comes out the zone of 174, then from there onwards it can attract some buying traction. But overall the structure looks very much pessimistic in this counter because overall the cycle of lower lows, lower highs has been continued from the highs of nearly 200 odd levels. So from there onwards, it has been in a corrective phase, and one can expect this to get reversed only on a gradual basis, or there could be some kind of news flow that can provide a strong thrust in this counter. But overall, one should stay sidelines until it surpasses the zone of 174. Why 174? Because again, it is the immediate highs on the technical charts. Even the 200-day SMA is lying somewhere around 174 odd levels. So once it surpasses those zones, then we can witness some kind of buying traction in this counter, but on a slower basis. It's not very strong momentum that can be seen in this counter.
Absolutely. So that's the word coming in on AB Capital. But any stock that we might have missed, Osho, that is on your radar, that could be added to the portfolio and that could perhaps deliver decent amount of return in the near term. Any stock that you would like to add from your side?
See, overall, the first counter for a portfolio point of view, then Bank of Maharashtra is looking very positive. So it's like a chota packet bada dhamaka that one can expect from Bank of Maharashtra. So it is having a very positive momentum. We can expect the trajectory for upside momentum to continue on immediate basis. 64 odd points is the zone that one can expect in this counter, but it is forming a flat pattern on the weekly as well as daily charts. So if it gives a breakout above the zone of 60, then from there onwards, one can expect another 30 to 35 odd points movement in this counter. So overall, for medium to long term perspective, one can expect a 3-digit number in Bank of Maharashtra. On immediate basis, 60 to 65 is the target that one can expect for short to medium term time frame.
Okay, so Tanya has now decided to charge royalty because she has patented Chota Packet Bada Dhamaka.
But I heard it from you, so I just implemented
whenever
it.
we use it,
Bought it from you.
Yes. So whenever now we speak about Chota Packet Bada Dhamaka, we have to give her a chocolate eclairs. Will that work?
Yes, absolutely. That will.
Okay, ladies and gentlemen, now is 9:54. We are 6 minutes away from what is a fairly decent first half an hour of trade. Remember, we'll be retiring 2023 today. It's been a great year. we'll be Nifty is up 18%. And as Tanya mentioned, 47% on mid cap, the same amount on small cap. The Nifty bank about 13% higher. It's been a fantastic year. Many indices such as the FMCG index, the auto index are at record highs, as also are extreme buoyancies being seen in the Nifty PSU banking index, the Nifty Central Public Sector Enterprises Index. All of them are at record highs. We are retiring 2023 today with the hope that 2024 will be equally bountiful. Just a note of caution, of the 18% rally in the Nifty in 2023, 13 percentage points, 14 percentage points have come in November and December. That skews the market a bit in terms of mean reversion. It essentially means that January and Feb might be places where the index may not go anywhere, might see bouts of profit booking, but the bull market remains in place. So keep an eye out on quality stocks. Any dips on strong ones, especially blue chips, they need to be added to your portfolio. Remember, it's a bull market, it's a trending bull market. The more you buy and hold, the more money you will make in the medium to long term. That's the quality of how a bull market works. And very strong momentum is likely to continue in the PSU basket, of course, with the right checks and balances. And with that, let's give it to Tanya. She'll wrap up the market. Thank you from my side for what has been a very exciting half year, being in touch with all the viewers of market today.
Okay, absolutely, Shail. And there is this Innova captive listing today as well, and we'll cut across to that. But thank you so much, Osho, for your time. Always a pleasure to host you. I started my technical gupshup show with you, so this year has been special for me too as well. You have been recommending top technical bets for our viewers, so special thanks to you as well for recommending such wonderful technical picks to our viewers.
Thank you both of you for having me at your shows. So I'll really like to appreciate that I have been called on your shows. So that's a very gratified I am. In the 2023, I have been on many shows. So that is something that I am very much gratified in 2023. And I wish both of you to have a very good, happy 2024 and a profitable 2024 for all the viewers and both of you. So thank you again for having me at your show. Thanks.
Absolutely, Shail. And since you are our technical guru, so your one word, your one advice for all the traders who are watching you right now.
So, Tanya, I am no guru, but I am, yes, a very keen watcher of the market. This is something that I have done for the last 27 years, and I do it in my sleep as well. One thing is there, one must understand how the psyche of this bull market has changed. Foreigners have now started buying. As we mentioned, December is going to be the best month for 2023. It's going to top 55,000 crore rupees, exceeding the July total. There is no let up in the systematic investment plans that are coming into the market. In fact, you are seeing them getting bigger and better. There is this theme running into the country, which is called the Modi premium, which is that you see how PSUs are outperforming not only the broader market, but also their own peer set. Therefore, my understanding is that the more sensibly you invest, the more money you are going to make. This is a bull market of epic proportions. Of course, with the requisite checks and balances and corrections, it will move ahead in 2024, but remain glued to your stocks, buy quality, and once you buy quality, hold it for the longer term. You will make so much of money that it's going to be impossible to count. If all this looks very difficult, just buy 3 mutual funds with a 60% weightage to a blue chip fund and a flexi cap fund, a 20% weightage to a small cap and a mid cap fund. That is all that you have to do, and put in money on a regular basis. Tanya.
You said it, Shail. I think golden words coming in and always from Shail, but you are also seeing the visuals coming in from the listing ceremony of Innova CapTab. Remember this issue received strong response from investors, and the Wall Street sentiments are also bullish. And experts also believe that the listing will be positive, and one can expect up to 20% listing gain as the issue was priced little higher. So that's the visuals coming straight to you only on BTTV.
So heartiest congratulations to the management, stakeholders, well-wishers of Innova CapTab Limited.
To experts, Innova CapTab's strong brand recognition, long-term relationships and ongoing active engagement with distributors have helped the company to expand its product offerings and geographic reach. But coming to you, Shail, I mean the primary markets have been on a roll in 2023, especially the SMEs IPOs.
Absolutely, Tanya, and that one word of caution that needs to go in is on the IPO side. There is just too much of froth, and that's a cause of concern because it's like a herd mentality. Invest, 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 and on your way up is only when you can exit in an SME IPO. On its way down, you don't get any liquidity. But these are characteristics of bull markets. We have to live with what is good, what is really good, and what is slightly unpalatable. The unpalatable part is that IPO and SME IPOs in particular are just way too overheated. Those who are lucky enough to get allotments must have this habit of booking at least 50 to 70% profit on the first listing pop, and then probably let the remaining part be in the long-term portfolio. This is a time when OFS is offer for sale from existing promoters and venture capitalists is exceeding the IPO, which is the initial public offering, the money that goes to the company to expand. So if sensible promoters and venture capitalists are booking profit on their investments after a long holding period, that baby should not be lying in your portfolio for a medium to long term kind of a time frame. You should also book profit if you are lucky enough to get how should I say allotment in the first place. So Tanya, that's the only point I wish to say, that this is an overheated market. A lot of caution should be advised, Tanya.
But एक बात है Shail, because my friends always complain कि allotment मिलता ही नहीं है. In whatever IPO you may apply.
That's true. So you shouldn't be buying on the first day is all I'm trying to say.
Absolutely. Chaliye, on that note, ladies and gentlemen, it's now time for us to wrap up this edition of Market Today. Once again, Happy New Year to all of you who are watching us right now from the entire team of BTTV. Of course, we'll meet again in the afternoon Market Today show as well. But let's see how the action pans out going forward. You don't have to go anywhere. You just have to stay tuned to BTTV for all the market updates. So stay tuned, and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. at PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Do you know which are the top 10 companies in terms of debt in India? Well, one of the key metrics that stock market